The crypto market just lost $1 trillion. Bitcoin is officially trading under $96,000. This crash is driven by one major Fed decision. Crypto crash. The global crypto market has lost over $1 trillion in total market cap since October 6th. The racing most 2025 gains, BTC low. Bitcoin has fallen to a 6-month low, briefly dropping below $96,000 for the first time since May 7th. Algo sell-off. The drop below $100,000 triggered massive algorithmic selling and cascading liquidations, accelerating the decline. Macro shock. The primary driver is fading expectations for a December interest rate cut from the U.S. Federal Reserve. Fed hawk. Markets now price in only a 50% chance of a rate cut, pushing the US dollar higher and pressuring risk assets. ETH plunge. Ethereum is lagging, down over 10%, with long-term holders offloading around 45,000 ETH daily. Altcoin pain. Smaller altcoins are suffering the steepest losses, lagging far behind BTC and ETH. Liquidity crisis. The crash proved that in today's market, code and leverage can drive chaos faster than any macro headline. CPI blackout. Macro uncertainty is compounded by the U.S. government shutdown, wiping out the release of October CPI data, leaving traders guessing. Stable DeFi hype. Despite the chaos, Mutual Finance $MUTM, a new DeFi lending protocol, has raised over $18.8 million in its pre-sale. Compliance wins. Crypto.com was recognized as a leading UK crypto app for 2025, highlighting its focus on security and transparency. ETFs holding. U.S. spot Bitcoin and Ether ETFs recorded at $253 million inflow on Thursday, offering a brief respite before the crash. AI surge. The world quality report 2025 reveals nearly 90% of organizations are pursuing generative AI in their workflows. Scaling fail, but only 15% of organizations have achieved enterprise-scale Gen AI deployment. Privacy risk. The top barrier to AI scaling is identified as data privacy risk 67% and integration complexity. C-suite shadow AI. Over 2/3 of corporate executives admit to violating their own AI usage policies in the last 3 months due to FOMO. Physical AI. The next wave of AI is physical AI robots and autonomous machines that understand the laws of physics, a massive new investment frontier. Logistics pivot. UK logistics experts are debating the urgent need for reskilling the 2.5 million strong workforce to handle AI and automation. Legal AI. UNESCO and the UNDP are training justice officials across Asia Pacific on AI and the rule of law to protect human rights. Our ISK off continues. The global sell-off is not crypto-specific. Major global stocks are sinking as investors flee risky assets amid tech rout fears. This severe $1 trillion market wipeout is a direct result of algorithmic fear meeting macro pressure. The failure to hold $100,000 confirms that the rally was too leveraged and over-reliant on imminent Fed rate cuts that did not materialize. However, the consistent ETF inflows and strong pre-sales in the DeFi sector prove that institutional accumulation and Web3 development are ongoing.